Good evening and welcome to a brand new show of Markets Tomorrow. Day one of a new week is in the books, and it was indeed a flat day of trade for Indian markets.
Oh, absolutely. And volumes are abysmally low in the session today, especially on the futures and options side, indicating that perhaps speculation in the market is, low on count, given that it's going to be an eventful series going forward. But on the show, lined up, our big market voices. You have Rajat Rajkaria, MD, Institutional Equities, and Motilal Oswal Securities, giving us his perspective. You also have Ashwini Gujral giving us the technical outlook on the market, and Nipun Mehta, founder and CEO of Blue Ocean Capital Advisors, taking us through his fundamental ideas at this point.
Well, I look at Indian markets, and here's the final tally. It was a flat and a choppy day of trade for benchmark indices. Profit booking continued. I would say mild profit booking actually continued in cyclicals. Capital goods stocks and cement stocks corrected. ACC, Ambuja, and Ultratech, they saw some bruises. HUL remained absolutely flat, even though numbers were in line with estimates. Volume dispatched numbers were not all that poor. There was momentum, and there was plenty of momentum in a JPA, that's JP Associates and Unitech, which by the way was the top credit count on both the exchanges. Just to map some of the prominent Nifty losers, ACC, BHEL, and then L&T. Pharma clearly was the sector of the day, and across the board Pharma had a pretty interesting and impressive session. So one side you had Cipla, on the other side you had DRL, and middle of the day we also saw smart price action in Wockhardt. Agri, that was the big theme of the day, and across the board UPL, Gen Irrigation and Rallis, they went up on strong volumes.
Yes, from the broader markets, there was enough and more activity. UPL, that was a stock which closed up 20%, 276 coming in there. You had Citi come out with a report, put an aggressive target there, 365. So fair amount of interest coming in on UPL in the session today. Then you also had NBCC, which was locked in circuit. Big order win coming in for NBCC, 10,000 crores, and that propelled the stock higher. Like I said, above average volumes, 20% locked in circuit at 203. There was a fair amount of interest that came in on select names. So you had Gen Irrigation, Rallis also pick up in terms of volume and price action. Some of the PSUs were active too. So MRPL, Navy Lignite picked up momentum as well. And that was across the board. Apollo Hospitals, Bufa ML came out with a report initiating a buy coverage, putting in a target of about 1,136. They are stating that the stock is likely to double in 3 years. So that's another bit that kept the stock in focus. 910 at last count for Apollo Hospital. On the losing side, you had some correction in real estate names, as also HCL Info, the ones that had largely run up in anticipation.
So how should one invest and trade in this kind of a market? Let's discuss all that and much more with our experts. Ashwini, let me kickstart the discussion with you. Ashwini, we can pick up spots and talk about those bright spots. But in general, I think markets are looking rusty and traders are clearly no longer chasing momentum.
See, you will not have a market that runs up continuously, day on day, minute on minute. You had your run up last month. Now it's a consolidation type of market. People with large money are sitting on their hands. They don't want to act ahead of an event. That's fine. I mean, you could have a market that's range bound for the next 2 weeks. And I think till then you will have your individual stocks running up and down. And that is the game to be played. I don't think anything is rusty or anything, the momentum is lost. But just that market is pausing before making that big move. You will see momentum and lots of it once, the event is out of the way.
So what's the call that you're making on the index right now, Ashwini, or is it more, stay out till there's a clarity on direction?
Well, I don't often stay out of the market. It's possible to trade, but you should know how. And broadly 6680, 6850 is the zone. Today you had a small trading range of about 35 points because yesterday was a fairly large range. Chances are that at some point we will move towards 6680. So around 6840, 6850, the market is having trouble moving higher. I think it will have trouble moving lower at about 6680. If you have to be long, you need to be long on the bank Nifty and take short positions on the Nifty. That's how you play it. The banks seem to be relatively stronger. Plus you have the pharma space that you can look at for going long. Otherwise, things like energy or infrastructure, metal, auto, etc., they are kind of moving down. So it's a bit of a up and down type of market, and you need to see which sector is leading for the day.
Nipun, three factors which have done the trick for us so far are strong global flows, hope of a stable government, an assumption that worst of the macro is behind us and earnings will only move up. But suddenly, two out of those three assumptions are getting challenged. In the near term, how would you map the risk-reward ratio?
I think the risk-reward ratio, given the kind of huge volatility that you might see, could be relatively high. It's going to be an uncertain market. Maybe 2 or 3 before the results, the election results, it's just going to be, as soon as the exit polls are out, there's going to be a huge amount of volatility. So if you've got the stomach to take that kind of volatility, it could be good to enter some of the cyclicals that are there. There are still, as one saw today, in several of the stocks where there were news announcements that came about, where developments were there, where there was clearer visibility of future earnings. A lot of these stocks actually went up. Some where the results were excellent for the March quarter. Again, these stocks really shot up on very high, relatively high volumes. So there is appetite amongst investors for a lot of those mid caps where the results are good, and that's where the risk reward ratio could be relatively high, depending on how the election results pan out, and how maybe even before that, 2 or 3 days before that, how the exit polls pan out, and there could be a good opportunity that could be there within that volatility that could be there.
Right. Rajat, whichever way we cut and dissect the initial set of numbers, with the exception of TCS and some, to a large extent Axis Bank, none of the numbers have been inspiring. Do you think somewhere markets also need to take notice of Q4 numbers, which by and large have been in line with estimates?
Well, I think if you look at sectorally, technology, we always focus more on what companies guide for. And before the quarter began, companies had softened their expectations or the near-term guidances. So that was something which was well known. Private sector banks, I think, across the space has been a very strong performance. Almost every private sector bank reported numbers which in this kind of an environment is really commendable. And most importantly, almost all of them are ready with not just financial capital but also with the physical network to capitalize on the next growth. Reliance was okay, Maruti was little disappointing, but I think these are very early days. We just have 15 out of the 50 Nifty companies reported, primarily being into technology and private banks. Technology was a slightly lower, but I think private bank numbers were definitely a boost to the markets.
Ashwini, come to you, and while you have given out your strategy on the index, what about the bank Nifty? How would you look at playing that index in lieu of the big event lined up?
A, I am not in favor of playing the event. Why? Because I don't know what the event is going to be. B, right now it's not such a blanket call that you buy the bank Nifty or that you sell the bank Nifty. You have to act on certain levels. That level was 12,950 today. On the upside, I think we could do maybe 13,200, 250. So broadly 300, 400 point type of range should be expected on bank Nifty. Do not go and buy rallies or do not go and sell declines. Try to trade the levels. If you don't know how, then possibly keep out of all the indices and just stay with individual stocks.
What could move your money tomorrow? Numbers, and lots of numbers. Bharti, JSPL and Sesa Sterlite, Nifty 50 companies which are due to come out with numbers tomorrow. So metal as a group will be an important group tomorrow. You got important mid-cap names, TVS, which has been a trending stock, CEAT, which has seen an extraordinary number. Markets are left with slight bitter aftertaste after the MRF numbers. So all eyes really would be on CEAT and what kind of numbers they report for the quarter gone by. From the mid-cap banking space, you got ING Vesa Bank, which again is an important number. IDEA will come out with numbers, and those results monetary action from brokerages will of course be important. Price action and defensive, especially in the pharma sector, could be of immense curiosity, because if markets clearly are in a pause mode, there is a serious possibility that defensives may outperform at least cyclical names or beta names in the short term.
Oh yes, indeed. And as Nikunj and I were discussing, keep an eye out for the daily turnover, because like we saw in today's session, and it's traditional that at the start of a new series, you will see turnover being on the lower end, participation being a bit absent from the market. But today it was abysmally low, the kind of turnover that we saw, especially on the speculative side, the futures and options. Keep an eye out on how trend picks up there, because it seems like, you know, going into the event, traders would be a bit wary of taking a directional call. As I was just discussing with Nikunj a little while back. Rajat, I want to come to you, talking about specific areas of interest in the market. As a house, you're the only bull on PSU banks. When SBI cracked below 1500, you went on record and said, look, SBI is cheap and it's time to buy and accumulate. Are you still a buyer in SBI?
Well, I think there were many easy trades in the markets just about a couple of months back, and 30-40% returns that we are seeing in many of these names is basically to negate those easy trades. From here on, when you look at SBI at 2000 plus, you have to take a definite view on the economic recovery, on taking a view that the asset quality stress loans are at their peak and will gradually start seeing an improvement. I think that big call for most of the investors is going to be taken only after the elections, and rightly so, because this whole slowdown has been a lot to do with the top-down environment, and this election outcome will have a pretty important impact. That's what I guess most of the people have been thinking about. So that easy trade is over. From now, one-time book, you will have to take a view on the economic recovery. Right now, if you look at most of the estimates, people are talking about a moderate recovery from 4.7, 4.8 this year to next year about 5.3 to 5.4. But whether this 5.3, 5.4 in the subsequent 12 months crosses 6% plus, that will be the key catalyst for SBI to perform from here.
Ashwini, the bright spot today was the entire agri space, UPL, Jain Irrigation, Rallis. Not only the price appreciation was incredible, the volume action in a UPL and Jain Irrigation was really extraordinary.
It appears some sort of a tailwind is there, but I would like to remind people that Jain Irrigation used to be at 250. So before we, kind of get overexcited, these should be looked at as trades and not really, big bull market till we really have stocks reaching new highs and new levels. So yes, in this sort of an environment where large money is not coming in, so you tend to get positive on these smaller names. So anything from Advanta to Heritage Food to Tata Chemical, UPL, all of these could perform in the next 10-15 days. But I would reserve my comment to say that these stocks are have entered a big bull market.
Right. Nipun, come to you, and we had BOFA ML initiate coverage on Apollo Hospitals, initiating a coverage with a buy recommendation coming in their target of 1,136. What's your view on the stock and the sector?
Well, we don't cover the stock per se, but as a sector, yes, as overall healthcare is, when we look at it, I think you're seeing tremendous amount of greater awareness that is coming about, that's showing up in terms of the extent of healthcare spend that is coming about. So you see across the board significant growth year on year that's coming about, whether in the listed or the unlisted space in the healthcare business. So, and that's, when you compare that with the kind of spend that's there globally, really there is a fair way to go as far as the domestic healthcare is concerned. So you're really going to see a fair amount of consistent high-level growth coming about as far as this healthcare business is concerned for the next few years.
Rajat, coming on some of these niche concept stocks, Jubilant FoodWorks, Just Dial, after the recent correction, is it time now to revisit some of these expensive but haloed names?
Look, one of the important things in these stocks is that on a reported earnings basis, they look expensive at all points of time. whether they are at their high or they are down 30% from their highs. But I think one of the very important trends that we think investors will need to now focus upon, last 4-5 years belong to the consumption place which were dependent on the rural economy. If the way things are expected to pan out, then I think the next 2-3 years could well shift the focus in favor of urban place, where a lot of the consumption related stocks which are pure beneficiary of urban demand can start seeing revival. Companies like Jubilant, companies like Titan, Maruti, many of them fit into that bill. And as a result of that, I think many of these stocks deserve good attention from investors right now. Stocks like Just Dial, the move from 1300 to 1700 and vice versa has been largely done by how you have seen the global internet plays or the e-commerce companies trading out. Friday was again a disappointing day for the technology companies led by Amazon. I think the volatility will remain here, but the direction for many of these companies is clearly up.
Idea numbers, and you've seen the PAT growth being 26% quarter on quarter. Sales have come in high by about 5.5%. Sales have largely been in line with expectations. There's been a bit of an outperformance as far as the bottom line is concerned, and there's been a decent growth on the subscriber base as well as ARPUs for the business. We'll get in a quick perspective on Idea in a bit, but first stocks to watch out for in tomorrow's session, and Navneet Saluja has a list. Navneet.
Hi, Tanveer. Well, the traders have two buy calls for tomorrow. One of them is the PSU stock, that is NTPC. Well, according to them, they see further upside going for NTPC. Since that stock has underperformed the markets on YTD basis, it's down about 13%. And overall, if you look at the financial, the company has sufficient cash on its balance sheet in order to fund its expansion plans. Also, it's trading at low multiples, because of which they see value in NTPC at current levels. In fact, if you go by a couple of brokerages, the recent reports, HSBC has given it a target price of about 154 with a rating of overweight. On the other hand, you have Nomura, which has given it a rating of buy with a target price of about 145. And well, the other stock is from the small cap space. You've got Ahmed Nagar Forgings, which has put up a good show in the last 1 to 2 months. Last 1 month, it's up about 19%. 2 months performance has been pretty much good, almost about 40% gains coming in there. Well, the dealers expect further upside for this stock, because we've seen some serious, delivery-based buying in the past 1 to 2 months, on back of which they recommend buying into this stock.
Ashwini, how do you propose one should trade tomorrow?
Well, broadly try to enter the Bank Nifty on the long side on dips. Dips to about 13,030, 13,040 on the cash index, and sell into the Nifty on rallies to about 6780, 6790. In case any of those levels start breaking down, then we'll see what we need to do. But for the moment, Nifty remains in a downtrend, Bank Nifty remains in an uptrend. As far as individual stocks are concerned, Havells is a buy with a stop of 930, target of 1000. Tata Chemical is a buy with a stop of 286, target of 303. And ACC is a sell with a stop of 1300, target of 1245.
All right, those are Ashwini's strategies. Rajat, what's your view on large cap IT? TCS, some would argue it's priced to perfection. Infi is where the value is, but Infi is not growing at a run rate which is even in line with the industry average so far. In fact, for the moment, it's almost like one is better off chasing growth in large cap IT, or do you think is it time to revisit growth which is in Infi and Wipro, be a bit contrarian in the market?
Well, this is a space where people always want to focus on the best growing companies. If last 5 years belong to TCS and Cognizant, they were the big outperformers. If the next 2 years these companies will still outperform the industry growth rate, the stocks will continue to outperform the rest of the sector. The case in Infosys was the recovery in growth that was expected from growing single digit to a hopefully double digit growth, but that theory at least seems to have been grounded for the time being. I think the key thing here to focus on technology is that while as a sector their dollar top line growth can remain in a band of 13 to 15%, and hopefully the earnings growth also be more or less similar to that. That is something which plays out well over a 3 to 5 year period. But if a 5 year CAGR is 17 to 18%, and if in 4 years you make up 25% CAGR, then I think it's quite natural to have the fifth year as a flat year. And my sense is FY15 could well be that year when technology at best can outperform if the markets go down. So basically technology as a space will not go anywhere. If the market goes down, they will outperform. If the market goes up, they will underperform.
Devil, give me some names. Where are you allocating money? What was your last big acquisition?
Well, given the market movements that we've seen over the last several weeks now, and given the risk reward that could be there going forward over the next maybe few quarters, we've again started looking at some of the PSU banks. Clearly, when you look at the value differential that is there between private sector and the public sector PSU banks, you look at most of the private sector banks being close to their all-time highs, probably 5% lower than what their all-time highs. When you look at PSU banks, still they're way off their all-time highs, and clearly the differential is the asset quality that is there. Our sense is, given the fact that there could be a more stable government and the investment cycle turning around, a lot of these banks could start benefiting. Yes, like we've said, 1 or 2 quarters of asset quality concerns could continue, but when you look at it from the change in investment cycle scenario, there could be benefits coming on as far as the PSU banks are concerned. So the risk reward ratio, like I said, could be high, but that could be one space that could outperform.
Rajat, come to you again and give us your top 3 multi-bagger names, ideas that you're chasing right now.
Well, I think a lot of the multi-baggers we will revisit once we have a clarity on what should be our top-down growth numbers. But I think a lot of coverages we have initiated over the last couple of months. I would think many of them have big return potential. But if you want multi-baggers, they basically have to come from economic recovery models. Some of them could be PSUs, some of them could be autos, and some of them could be the capital good and infra names.